Hello, my dear students. In this session, we are going to consider theory-based accounting. Under theory-based accounting, today we will consider one specific problem from the chapter of retirement. So this is our problem. And there are three partners, X, Y, and Z. In their profit sharing ratio, 3:2:1. Z is the retiring partner as on 31st March 2018. They want to take retirement, and the condition of that on that date retirement, the balances which already appeared in the books of the old firm, like first one, general reserve 1,80,000, which is shown on the liability side. Profit and loss account debit balance, which was shown on the asset side. Debit balance means loss. Workman compensation reserve 24,000, which was no more required. So that is also shown on the liability side in adjustment, like no claim so far arises. So that we have to distribute to all partners. Employees provident fund 20,000. Regarding employees provident fund, no more information are there. So these are like information which was shown on their financial statement, and we have to pass necessary journal entries at the time of retirement of death. So this is very simple. Like when we consider full problem, that time we did like general reserve. It is a part of item, that is general reserve account debit to all partners capital. We already close by transferring this general reserve to the all partners capital account under old ratio. Here it is profit and loss. It is a debit balance. So ultimately loss we have to eliminate here. We have to pass the entry like all partners capital, including retiring partners capital account debit to profit and loss account. Workman compensation reserve, here unclaimed, totally unclaimed. So total we can distribute here. So therefore here it is one type of reserve, just like treatment will be general reserve. So here the treatment workman compensation reserve account debit to all partners capital under all profit sharing ratio. Now regarding the employees provident fund 20,000 provided. So that employees provident fund, this is the external liability. We cannot distribute to the all partners capital if any changes take place at the time of retirement, either increase or decrease, that we have to consider on revaluation account. So here no such type of information are there. Now therefore we will keep as it is. Now see the solution. Here is the solution. First solution, like these two are undistributed profit, general reserve and workman compensation fund or workman compensation reserve. So these two undistributed profit will be debited. So therefore we make this debit amount of general reserve, amount of workman compensation reserve, and that will be credited to partners capital account under their old ratio. Here it is mentioned under old ratio. X capital, Y capital, Z capital. Amount of X capital 1,02,000 and Y is 68,000, Z 34,000. For that one working is there. Below will show the working. Here there is the working. Like if you check the working, here is the working. Here like total credit balance of the two reserve, like workman compensation reserve as well as general reserve, 1,80,000 plus 24, so 2,04,000. Now that is share of X, share of Y, share of Z, 2,04,000 into old ratio 3/6. So it is coming here 1,02,000. Y share came 2,04,000 total undistributed into Y share 2/6. It is coming 68,000, and Z share like 2,04,000 total into his share 1/6, that is 34,000. So that was only distributed. Now debit balance like profit and loss also on the same way, 30,000 in their old ratio it was distributed. And regarding the employees provident fund, here as no liability arises, so here like we cannot consider it here, as it is a one way, it is external liability and no changes take places, so no revaluation account will happen in these cases. So therefore this is the treatment here, like it is shown this amount from the working we got here. X capital 1,02,000, Y 68, and Z like 34,000. This is to our undistributed profit, So undistributed profit means liability side item. Generally, when you close the liability side item, that time it will be debited. Maybe general reserve, maybe profit and loss, credit balance, maybe any other fund. So that time that will be debit because they are holding their credit balance in nature. All the liability side items shows the credit balance. Now when you will close it, we have to pass opposite, or you have to make opposite, like like credit balance you have to make debit. So general reserve, like closing of general reserve, therefore we are debiting it. It was early balance was credit, now it is we are making debit, means it is transfer or cancel. General reserve now came in zero. Workman compensation reserve also zero balance will show in new balance sheet as we are debiting here. And here that three partners capital, here they already have the credit balance. Again we are crediting, means it is accounting plus, so the capital balance increases because this is ultimately profit. So when you transfer the profit, the automatically capital will increase here. And in this case, reverse that capital is debit. Why it is debit? Because it is ultimately profit and loss account. It is a loss. Debit balance exists here. So when we want to cancel, so therefore we have to make credit here. Profit and loss account, therefore we are crediting, and all the partners capital here debiting. Here capital debit means their capital balance decreases as they are sharing the loss. So this way we can like explain that, like this is undistributed profit, undistributed loss. So this is the next part. This is the working already discussed. Now I think so this is a specific problem. This type of problem is a part problem, it can come in exam. I think so it will make clear to our learner. Now in this session we are going to conclude. Thank you very much.